My name is Maurice Washington. I want to welcome everybody to another episode of Executive Talk. Those who are watching live and those that are watching later, or those that are listening on our podcast, thank you so much for joining us today. In today's show, we're talking about the beneficiary accountant checklist. One thing that we don't recognize is when someone passes, what does the accountant need? It's one of those things that we don't really commonly think about. So we're going to have Victoria Smith, owner and operator of Victory Accounting, to talk to us a little bit further about what that looks like in her world. So Victoria, how you doing today?
I'm great. How are you doing, Maurice?
I'm doing fantastic. Nice to see you. How's your tax season this year?
It was great. How about how are you doing this fall?
Well, I'm doing well. I'm doing well. Just ready to, as you know, transition to next year, get all the gears ready for that. So um, I want to first of all thank you for your service this year, for the people that you're able to help. I know there were some people that were possibly behind in their taxes or in certain situations, but just for you to go in and dig deep and do your business the way that you do, help people get compliant, it's fantastic. So thank you for that.
Thank you.
So now, with all that being said, let's get back to the topic in order here, which is the beneficiary accounting checklist. Why is this not something that everybody is aware of? Let's start off right there.
So it's not like we are given classes or anybody is really taught of what to do when somebody passes away. You're already grief stricken or and dealing with a lot on an emotional and other aspects of having to deal with planning a funeral. That there's a lot of stuff that can get pushed off and not realize that they also need to be completed within this time frame. And so even if you have maybe had somebody pass away, maybe you weren't the executor or taking care of all of the items that need to be taken care of. So you may also not know all of the different aspects that come into it. So it can be difficult to know what needs to be done and what doesn't need to be done.
That's fair. That's fair. Okay. So let's talk about that process real quick. And one of the first things that you're suggesting here is that people need an appraisal. So we have a photo of a house here and we have the car. Why is this step one of the first major steps that you have to, have this done?
Correct. So when somebody passes away, their assets get increased to the fair market value at the time of death. So the sooner that you can get appraisal done on the assets, especially like a house, maybe if they have a more expensive car, you might also want to do that as well. Or if they have artwork or something that, needs an appraisal that you plan on selling in the future, those would be items that you would want to get taken care of as soon as possible, so you could be as close to the fair market value so that you have no complications with the IRS.
Gotcha. I got you. And so with the appraisal, it feels like it gives more of an accurate detail as to what is everything is valued at.
Correct. And so like even if your spouse were to pass away, and let's say you buy your house back in the 60s for $50,000, and now your house is worth $500,000. Your spouse's basis in the house was originally 25. It would move up to that $250,000 mark. So that's why it's important to get that appraisal done, even if it's your spouse that passes, so that if later you do need to sell the house, we have that increased basis to go off of.
That makes sense. Okay. This is another one that perplexes me, just again because I don't know, but this is one of those 1031, the estimated tax. Why is this another factor within this process?
Yeah. So when somebody passes away, you might want to put them on a fiscal year. The reason for putting them on a fiscal year is that, let's say somebody passes away in October, and you keep them on a calendar year, then you're going to file for that year, and then you'll file for the next year. Well, if you don't have everything taken care of, that following year, you're technically required to pay estimated tax payments if you're going to owe the IRS any money. And this can be difficult sometimes to figure out. So it's a good idea to move them to a fiscal year, because then you would have the October for a full year, and then you'd have another full year before you'd have to pay any estimated tax payments. So that would give you a full 2 years instead of really a year and 3 months.
And let me pause you right there, because I feel like this is where people get hung up. If that person passes in October,
correct,
the mental is that person's dead. That person's gone. Right. Let me just be blunt. So that means everything, their income and all that other stuff is gone as well. So I don't need to, the first mindset is I don't need to file or claim any kind of taxes in regards to that, right?
You would think so, but you're still required to, for whatever they've gotten paid before in that year, you still have to, you're required to pay that or pay any
Okay.
taxes that are associated with that. And then, depending on how much they have in assets, you could need to file and pay taxes on assets or other aspects of the estate, just depending on their situation.
Okay. And now let me ask you this from a confusion standpoint, is that where a lot of people get hung up and confused that do you see a lot of people have that same train of thought that I just presented?
Yeah, it's once you think somebody's gone or passed, that you may think that like, oh well, all the liability is on them. It's technically on whoever is the personal representative. Like the IRS can come after you to get the taxes paid and anything else. So there's different entities that could still come back after you and say, hey, these need to be paid out of the money that the person did have. That's technically not yours until you've paid everything. So you could be held personally responsible for some of those items.
Wow. Okay. All right. This is why this is good information. This is another key note right here, which is needing an EIN number. Now, typically, when you need an EIN number, as you know, as a business owner, you need an EIN number. Why is this now more important than just having that person's social security number?
Right. So you pull an EIN number for the trust and the estate account because the IRS is trying to separate what was your income from when you were alive to what's your income after your passing. So they're trying to keep everything separated, and the best way to keep everything separated is to have you pull an EIN number. It's free and pretty easy to do on the IRS's website, and you can usually have it within. It takes about a 5 to 10 minute process.
Right. That's true. Now, does that person need to keep that EIN number for, I mean, how many years do they need to keep it? Because again, once that person's deceased, do they need to keep it for the certain circumstance, or do they need to keep it for the duration of their lives?
So it's just for the duration of the estate. And then maybe a few years later, just in case the IRS would ever pull anything back up. But usually once you're done with handling the estate and settling everything, you shouldn't really need that number anymore.
Okay. All right. But again, that's where you come in and actually. So, do you help administer for those that don't know how to get an EIN? Because most people aren't business owners. So, coming in to get an EIN may be a little daunting task. Is that what you help set up for them to get the process going?
Yeah, I can definitely help them get an EIN number for somebody who's passed. They're going to have all of their prior information and the data they're passing and everything. But that is definitely something that I can help with if you need help with that part.
That makes sense. Okay. Well, let's move right along because this is the place where nobody wants to go, but probate court starts to come into play. And all of this, it's just interesting how all these entities start flaring up once somebody passes. So, probate court, why does that? So, we got the appraisals, we have the 1031, or I'm sorry, the 1040, and then we have the EIN, and now we're going to probate court. So now talk to us about this step.
Yeah, so you're going to go to probate court so that way you can settle the estate legally. It also helps give you the paperwork to be able to claim that you're the personal representative of that person. So that way, if you need to go to the bank and get money out, or there's other things that you need to prove that you're the person taking care of the estate, the probate court gives you that paperwork and that permission in order to get some of these other tasks that you might have to do done. It also helps you legally settle everything. So if there's more than one person involved with the estate, this would be your way of legally settling everything so that years down the road, nobody could come back and say, well, I didn't get this and I didn't get that. This is more of a way to kind of finalize everything.
Yeah. Because that is true. There is that process of going back and talking to their other creditors, getting everything switched out. So with this probate court, it actually helps that whole process, right?
Right.
Okay. All right. How does this show up from a tax perspective? I mean, where does that relationship come from probate court to on your end?
Yeah, so it's good to have the probate paperwork so that if you turn in anything to the IRS, you can prove that you're legally the representative of the person that's deceased.
Okay,
So
got
it's
it.
just another method of proving that you're the person that they need to be talking to.
So the key component is when you communicate to the IRS, leave as less questions as possible, right?
Correct.
Gotcha. Okay. So then, with that being said, the death certificate is this another proof that that person has passed, so that way there's no legal issues.
Correct. So you're definitely going to want to give your accountant a copy of the probate paperwork and the death certificate so that that way when we're filing any forms that might necessarily need those documents to go with them, we have those documents to send out.
Okay. This form right here is what confuses me. Is the form 56.
Yeah.
So now we're getting all this paperwork. Now, here before you answer this question, as far as the submittal of the form, this is so we're going through a process. Obviously, we're going through an appraisal. We're getting EIN. We're filing these forms. We went to probate court. Now we're getting a form 56. Does is there any process in which before a person passes, this should? I mean, obviously you have to do this stuff after, but is it in there the person pretty kind of emotionally messed up at this time to actually have to go through all this process?
Yeah. I mean, there's just a lot to do when somebody passes away, unfortunately.
Yeah,
Sometimes we can't just sit in our grief, even though we would really love to. Um, it is like a time where your life is going to get more complicated and there's going to be a lot more to do, unfortunately. Um,
hmm,
it's definitely good to get an accountant involved at this point, especially if, you are so grief stricken, they can help you work through some of this process. Also, getting an attorney to help you with the probate court, that can take a lot off your plate as well to have them taking care of a lot of that.
yeah,
Both of those things you can write off on the tax return if you were going to owe any money. So keeping those ideas in your head to like hire people to help you through this process, and that can technically come out of the estate money. So it wouldn't be a bad idea to get other people on board and on your team so that that way you're not having to quite take on so much yourself. You're just kind of more overseeing some of the stuff.
that makes sense. Okay. That's good. I want people to recognize that, and that's a fantastic answer because that's why you have a service provider to help you through this time frame. Because taking it on yourself, you may skip a step or just just be too stressed to deal with it. But talk to us about the submittal of the Form 56 and why that's so imperative.
Yeah, so the Form 56 notifies the IRS and other state entities that the person has passed away. So if they were getting IRS letters or any other sort of mail from the IRS, then this form notifies the IRS that they have passed and that any mail moving forward should be sent to your address. So that helps keep you in the loop. Also, I would send this certified signature so that if ever later on the IRS is like, well, we were sending you letters saying that they owed this money. You have a copy note saying that you notified the IRS that this is where stuff should have been mailed to.
Okay, fantastic. Well, let's go ahead and look at this checklist here. So, what we learned here is the accountant will need the following, which is a copy of the will, death certificate, appraisals, EIN number for the estate, probate court paperwork, gift tax returns filed. So now, talk to us about the copy of the will and also the gift tax returns, if you will, Victoria.
Yes. So the accountant is going to need a copy of the will because this is the governing document of how they're going to take care of filing the 1041, which is the form that needs to be filed after the person has passed away. This kind of governs how we handle all of the assets, how everything is taken care of, where it goes on a copy of the return. So this is a really important document to give to your accountant. All of
Hmm.
these documents are necessary in order to complete the tax return for the person who's deceased.
Yeah.
A copy of previous gift tax returns is that we only have a certain number of money that we can give away over our lifetime. right now it's 12,900,000. So any gifts that you've given away previously go against that number. So you're supposed to keep track of those gift tax returns and keep them on file throughout your life, so that when you do pass away, they know how much you've already given away, and that comes off the top of your current 12,900,000 that you're allowed to give during your
Okay.
life.
Got it. The one thing that popped to me as or spoke to me as you were talking about is copy of the will. What's the important? Because there's a lot of people who have not even taken care of their will yet, and this is not a judgment. This is not a slap on the hand. This is just more of a wake up statement. But that copy of the will, if that's not there in your hands for this transfer, what happens at this stage?
So if you don't have a will put together, or some sort of document that says this is what you want, then we have to go by state laws. So whatever the state laws are, those will become the governing documents and governing will rules. Most people don't want the state to decide how everything is split up or how everything is taken care of. So if you put together a will, then that will supersede any state laws. So I highly recommend that even if you don't want to go to an attorney or can't afford to go to an attorney, at least put something in writing, file it with the courts, or get somebody to notarize it, so that that way there's something in writing saying this is what you want to happen. That way you at least you have something somewhere, so that way you have the ability to control what happens after you pass away.
How much easier would that make your life if you have that will in place versus not having it? So if you don't have that will in place and you still have to file this paperwork, what type of issues do you run into?
Usually the beneficiaries aren't happy with how the assets are divvied up.
Mm-hmm.
And so it's more for your beneficiaries than it is for anybody else.
Yes.
It's more for their benefit, because they're the ones who are going to be dealing with everything after you pass. So if you can do as much as you possibly can when you're alive to help reduce the amount of stress and workload on them when you do pass, and giving them the opportunity to really, not have to work so hard and just kind of deal with the fact that you've gone.
That's it. All right. Well, let's get back to some more of these forms, because we have file the following forms: the 1040, the 1041, and 706. So talk to us about the 1041, because we haven't addressed that yet in the 706.
Yeah. So the 1041 is kind of like the 1040, but this is for anything that is received after your passing and is distributed to your beneficiaries.
Okay.
So it's really continues to be filed until everything has been settled. So you may have to file a 1040 for 2 or 3 years, just depending on how long it takes to settle the estate.
Gotcha. And that there's notifications, I guess, from the IRS that tells you when you're completely done with that, right?
So it'd be when you've completely settled. So when all the assets have been distributed, when you're completely done in probate court, everything has been paid
Okay.
out. That's when you're done, and you don't have to file any more 1041s.
Got it. All right. And so the 706, what was that one
Right.
again? I'm sorry.
Yeah, so the 706 is great. It's if you have to file it if you're going to skip a generation. So
Okay.
let's say instead of leaving your assets to your kids, you're leaving some of your assets to your grandkids. Then at that time, the beneficiary is required to file a 706 because of that generation skip. You also should file a 706 so that you can go ahead and elect to do the portability exemption. So that means that, like, if you're married and you have a spouse, you file the portability election, which means that you raise your assets, that you're allowed to give 12,900,000 away. And so that carries forward with your spouse. Because in 2025, the election or the eligibility to transfer assets is going to drop to only 5 million. So if you were to pass away in the next couple of years, or your parents were to pass away in the next couple of years or the next year or so, then you would want to file that election. So you would keep that amount of assets higher rather than at the 5 million.
That's fair. This one is curious. I want to dig a little bit more into what you're talking about with the 12 million because I have a question about that.
Yeah.
But this one right here, 6 months after filing the 1040, you have a 4810 form that needs to be filed and the 5495 form that needs to be filed. And these are two, from what I remember you talking about, these are two major forms and they have a lot of implications attached to what. Please explain to everybody what those two forms are.
Correct. These might be two of the most important forms that you file with everything else. The reason you would file the 4810 is that this reduces the IRS's ability to go back and audit you from 3 years down to 18 months. Nobody wants to be still dealing with the IRS 3 years after whoever has passed. If we can cut that time down into only 18 months, then that really can help you from having to go back and dig through stuff even more. So that's a really nice form to get filed. It's optional, which is why it's not like something that most people know about. So, but it's definitely a really important form and a great form to file for your clients. The 5495, that form, when you file it, it reduces your liability of having to pay taxes from 10 years down to as little as 9 months. So let's say that they owed taxes way back like 6 years ago and never paid them. If you can get that form filed and you never receive notification from the IRS within that period of time, then you won't owe those taxes. And they can't come back after you because technically the IRS has 10 years to collect.
Gotcha. So if you leave those two forms and if you don't know about those forms, you can be on the line for 10 years down the road, right?
Correct.
You can get some kind of bill. Okay.
Correct.
That's
so definitely
insanity.
want to reduce your chances of that happening.
Yeah. Oh man. All right. And this is in connection with what you were talking about earlier, as far as the portability exemption election, and you're talking about the 12,900,000 or 900,000. It needs to be within 9 months. It drops to 5 million in 2025. You want to elect in on the 706. So that's why I wanted to really resurface this statement that you're going down, which is awesome. But I have so it's in connection with the 706, the portability exemption.
Correct. So you would file a 706, and then you would have a box where you would check to make the portability election. This would help increase that amount for like if your spouse were to pass and then you're, obviously keeping all the assets when you go to transfer them to your kids. This would help increase the amount that you could transfer to the children without them having to pay taxes on it. Once you hit over this amount, then you have to pay taxes on any assets that are transferred to the decedents. So, and the descendants. So I know everybody thinks that, well, I'm never going to hit $5 million.
Exactly.
But if you think about it, like the prices of our houses have gone up exponentially in the last couple of years. So you may have a house that's worth $1 million, $2 million. Yes, back in the day, you maybe only paid, a small amount for it, but now it's grown exponentially. And if the housing market continues to grow like that, then, you might get close to hitting that number. Also, if you have several rentals, let's say your house is worth $2 million, you have 2 or 3 rentals that are each worth $1 million, or, getting up close to those numbers, you could easily hit that $5 million by the time you have stocks and bonds and everything else. So it's a good idea to try and increase that as much as possible so that your beneficiaries are not having to pay tax on any of that.
Victoria, earlier when we first started the show, you were talking about the appraisals. Is this where the appraisal amount comes into play?
Correct. This is where the appraisal amount would come into play. So, because you would get appraisals on everything, and that would tell you where you're at as far as how much the assets are all worth.
Got it. In wrapping this up here, Victoria, there's one thing that goes to my head is there obviously there's a lot you're giving us a process in which needs to happen when somebody passes, and how the accountant role is part of this whole situation.
Correct.
But I want to go ahead and pause for a minute and consider the family effect as to I don't see a lot of families connected well enough or in enough communication to where they're saying, hey, here's my folder over here. Should I pass, here's everything you need to know. Do you feel like
Right.
there's a lot of that set up, or when you see people bring that to the table, do you see it organized in that way?
No. A lot of people have no idea what is going on. They have no idea what the person has, what they don't have. They're kind of lost when it comes to that financial aspect. So it's really good to, try and keep something somewhere saying, this is what I've got in these banks. These are these accounts. These are, what I have in mutual funds. This is where I have this. Um, if they do have an accountant, the accountant might have some of that information for you and might know some of that, because they do their taxes every year and they kind of have a better idea of where they might have accounts. So reaching out to the accountant sooner rather than later can be really helpful and beneficial to kind of help organize some of this. If they don't have an accountant, then you could be finding stuff years later down the road saying, oh, I had no idea they had this. I had no idea they had that. It can make things really complicated and difficult to navigate.
So true, so true. All right, Victoria, is there any other closing thoughts that you would like to give to the audience? The floor is yours.
Yeah. When somebody passes away, it's a difficult time. You have so much going on that you have to take care of. There are so many different things happening at that moment. Uh, get a team behind you that can help you navigate some of these different aspects that you're going to have to go through. Make sure that you get the support that you need, and help you navigate all of these different strains that you're having to go through. There's no reason not to ask for help, especially during a difficult time like this. This is the best time to reach out to your accountant or find an accountant to help you navigate.
I couldn't agree more. And thank you so much for taking the moment to explain this to us, because, again, this is not common knowledge. There's not even common knowledge that an accountant has this much information or is involved in the process of this nature. So thank you so much for helping us explain how this works. So, again, we will touch base again. There's a ton of more things to discuss over before this year ends and getting ready for next year. So, again,
Right.
thank you for taking some time out of your schedule, Victoria.
Thank you.
All right. We'll see you next time.
Sounds great.
All right. All right. I want to pause everybody for a moment here. When you think about what Victoria said, there's a lot to it. One thing that we have mentioned, and we talked about some of the conversations that need to be had within the time that person is alive. One thing that we do excellent, which is take for granted time. I think we're always going to be around. Well, when that person passes, that's when everything hits the fan. That's when the information, oh, I did not know this person had this. I didn't know they had this in the background. Your background will show up at some point. And the people who are left with the background are your beneficiaries. With that will, with everything that they need to have in place in order to move forward with their lives, please put some kind of plan together. This is where the accountant, and this is one thing I love about this show. I did not realize how deeply involved the accountant is into your life. That they're one of the last people that you still need to see as well. So your accountant plays a huge role within your life, is instead of just doing your taxes year after year. So make sure you have your ducks in a row. Make sure your family knows what's going on with your situation, where to find things, so that way they can truly grieve and maneuver quickly. Get these conversations, get the people in place, so that way you can make phone calls, get appointments set up, go to court, get your death certificate, get stuff to the accountant, get everything filed, and get that stuff in the past. So, again, there's a lot of messages within the show that I want people to cling on to. Number one, know that the accountant is involved in this. Number two, understand, get things prepared so that way your beneficiaries can move on and process and move on with their lives. I want to thank you for listening to the show with Executive Talk. Victoria and I, we have to get back to work, so we'll see you next time.